concern as to what might happen. We're going to take out one line here because it might be a little too cluttered. We're going to take out the predicted medium-term moving average and just show the predicted high and low. This happens to be IBB, which is the NASDAQ Biotechnology Index. I want to show you a couple of things about that first before we go into kind of our picture drawing mode. That is, if we look at it from a year ago, you will notice that we have a point right here where the market reached 84 and we currently are near 84. So just keep that in, kind of that high, that previous high as a point to keep in mind as the market moves up and as you wonder how it's going to trade from here. I'm going to cut back down now to 3 months and talk a little bit about IBB, which is the, as I say, the biotech index, and it is a market, an area that a lot of people might have thought didn't have a lot of chance, or some other people would have thought, aha, this is, now that we have a new president, now we have a situation where maybe there will be some things that will come along that will favor this particular industry, and it will be better for all concerned. It's hard to say exactly what people think, but they can express their opinion in the market, and they will, and they do. With the biotech index, one of the things we need to talk about, again, is the crossover situations that we have. You have a situation at the bottom in this area right in here. We're going to just kind of talk about a couple of these little bars here or candles here for a moment. You had on November 5th, again, we're talking about the election 522. If we use our little criteria where we're going to buy at 75.72 or our 50 points above the predicted high just to give it a little room to move. So we're on this particular candle right here where we would be buying above the predicted high in this neighborhood right here. Now, as the market goes up, again, you're going to be keeping a stop with ETFs. I look at them a little differently than I do like futures or options. A couple of things about ETFs, very important. They don't have an expiration time, a factor like there is in futures or options. It's not a wasting asset like it is with options, so you're not inclined to have to move. So if I'm looking at something where I might be inclined to hold a little longer, I might be able to just say, okay, as long as I've got some money, I'm not down. This point that I have in this area right here, even though it's it has dropped back and is below the predicted low, I'm still ahead. I'm still okay on what I have. So I'm keeping this as a longer term investment, and that's how I view ETFs and how I trade them. Then, as the market moves back up, it depends. You might kick in another buy order here. You might just sit with what you had, depending upon what size that you bought. But then again, all of a sudden, or I shouldn't say all of a sudden, but then the market moves up to this level right here. And as you remember, I said 84 below when we looked at the previous longer term chart. At least you might expect it to have some as resistance is hit, some reaction to that point. So it's an important area to watch because it is a previous high. It's again not a sure thing that that's going to stop the action, but it is possible that it could. Now we're going to go back again to the computer screen and show you a little bit more about Vantage Points, other ETFs that we're going to talk about, because we've kind of set up the framework here of what to do with a particular type of thing. And as I said, some markets will change more quickly. Some of them will be active, and some of them not so active. But let's look over here. Let's go to our international, and we'll just say what we had here before on our U.S. ETFs, and we're going to look at our international ETFs. Some cases, I think the emerging market situation has been one of the strengths of the stock market recently, and so here you have the emerging market ETF. You'll notice on there you'll have some of the same types of distinctive points at which the market moves above predicted highs, below predicted lows, and so forth, but a lot more skittish. it's got some gaps, it's got some jumps all over the place, and I don't know if this is a result of trading or the hours or what it is, but it does point out that there are a number of different markets that perhaps if you were looking at it, you might not want to trade these as actively as some other markets because the skips and the gaps can be fairly drastic. And I'll show you here on the China index, FXI. Everybody's excited about China, but as you can see, we've got lines going all over the place. Volatility is such, and when you have the liquidity factor trying to get in, trying to get out, can be a problem if you are not fortunate enough to do this at the right time. Now let's also go over to another market that I know everybody has been interested in, and that is the gold market. I know that gold is, kind of one of those things. It's a market that everybody thinks they have to have in their portfolio because high inflation. I mean, there are a lot of factors about gold that people are buying gold for, and then, as you know, recently it went down and then it went back up. So gold is a market that everybody is following, and there are different kinds of ETFs that we have that we can apply our knowledge about gold. We're going to particularly point out that let's switch here, go over to our screen where we can do a little drawing on this and talk a little bit about the gold and the comparison of the ETFs and the gold market, the futures market. As you can see with the gold market, we have situations where the gold went up very dramatically, very sharply. Everything was, like gung-ho. It was zooming up and got up to a point around, it topped $1,200, but we'll say $1,200. You can see that, the same thing. This is the Street Tracks Gold Trust, GLD, which is one of the most popular ones. We'll talk about that in a little bit more, few more moments, but you can see it goes up. So the action is relatively similar on all of these. But if you were to go on a comparison, and let's say depending on your particular account, if you were to drop from, let's say, 1,200 down here to if you drop $50 in gold futures, what you have here, if you drop $50 in gold futures, you have 50 times 100 ounce, $5,000. Now that might be ideal for some people, not so ideal for somebody else, and so that's where the ETF comes in. You have the same type of drop here.